I'm going to move on to Saudi Arabia now. Saudi Arabia is actually quite a young country, or at least in its current state. It was founded in 1932. Still, there are large regional, often even clan-based differences, which also are represented in the economical map of Saudi Arabia. Let's have a look at the map at the top of the slide. We're starting on the eastern coast. You can basically divide Saudi Arabia into three parts, roughly speaking, of course. On the eastern coast, you have all basically of the oil production. You have the triplet cities of Dammam, Khobar, and Dhahran, famous, for instance, for the Aramco headquarters, which is the national oil company. Then you have the middle region, dominated by Riyadh. Riyadh is the capital. It is where I am currently based. From a purely economical point of view, Riyadh is a city which really doesn't belong, where it doesn't have the position it has today. There is no commerce basically going on here. Riyadh is the capital, and Riyadh is the biggest city because the royal family has decided this is the region they hail from, and this is the city they would like to be or have as their capital. On the western coast, you have, of course, Mecca, Medina, which are the second or first and second most holy city in Islam. You also have Jeddah, which many people call the commercial hub of Saudi Arabia. It has, for instance, the Saudi monetary agency still there. Another city of interest is King Abdullah Aziz Economic City. I'll get back to this one. It's currently not too big, but it's a very interesting project. In section 4, I'll talk about that. Basically, this region is a region along the Red Sea which has much longer historical, cultural history. Jeddah, for instance, was previously the base of the embassies until not that long ago. I'm going to walk you through these facts on the lower table on the slide. GDP in Saudi Arabia for 2010 was 469 billion US dollars. I am now talking about nominal GDP, not PPP adjusted. Growth has been very strong this year. It is assumed that the real growth, note real growth, I mean above inflation, will be 7.1%. This is the estimate for 2011. Why we have this strong growth right now? First of all, during the Arab Spring, Saudi Arabia stepped in and covered for Libya's oil production, because Libya during, of course, this, I don't know what you call it, the civil war, there was no oil production, of course. The oil prices have been relatively high this year, and also due to the Arab Spring, they launched quite large stimulus packages. These are not stimulus packages the way we know them from the West, as we're trying to shore up an ailing economy. This is a stimulus package basically to prevent something like the Arab Spring happening in Saudi Arabia. The first half of 2011 saw 26% growth. This is not adjusted for inflation, and this is not real growth, this is just growth. And of course they're assuming that the second half will be a lot slower, hence the 7.1 estimate. Inflation has been around 5% in last couple of years, a little bit lower. Right now they're estimating 5.3% for 2011. Of course, the more oil revenue coming in, the stimulus package is part of the reason that this inflation estimate has been pushed up a little bit. I jumped over petroleum percentage of GDP, which is 55%. Population growth is a healthy 1.5%. That is quite a bit coming from a Western perspective. Net foreign reserves are at 481 billion US dollars. The last couple of years, we have seen quite high oil prices. Even despite the global downturn and the recession, oil prices have been relatively resilient, allowing Saudi Arabia to run budget surpluses, pay back debt, and now build up net foreign reserves. Of course, they do still have some debt, which means that their reserves are sort of larger, but these are net foreign reserves. For instance, their sovereign wealth fund alone is basically 2,000 billion SARs. SAR, by the way, is the currency here. It is pegged to the US dollar at the rate of 1 SAR equals Oh, sorry, $1 equals 3.5 SARS. For Norwegian listeners, it's about roughly or currently one and a half Norwegian kroner to a SAR. Yeah, like the net foreign reserves are roughly 111% of GDP. Moving on to trade flows. As you'll see, I only have numbers for 2007 and 2009. I'm sorry I couldn't get you the 2010 numbers, but I only have net numbers for Saudi Arabia. I don't have them broken down on the individual countries. So these numbers, of course, have changed a little bit in the last couple of years, but I'm just here to show who are their main trading partners, and maybe the top spots have changed a little bit, but basically it'll be the same countries more or less on the list in 2010 and also most likely in 2011. Imports. Saudi Arabia has historically always imported the most from America, at least in modern times. China, of course, is an import machine, growing exports to all over the world. They have been catching up, but still, America is their main importer. Germany also another high importing or exporting country. So they basically, when it comes to imports from all the big economies in the world, there's Japan and some of the big European ones. Note that they don't really import much from their neighbors. Of course, that's because most of their neighbors are selling oil and gas. Not many Arab countries here, so most of their trade is done globally, not domestically. Also, the same for exports. Of course, they're not going to sell oil and gas to their neighbors, naturally. If you wonder why the numbers have fallen so much from 2007 to 2009, of course, that is due to lower oil prices in 2009 due to the financial crisis. Right. That basically, you're of course free to look through the details by freezing the video and looking through them, but that ends this section. I hope you will follow us for section 3 titled Oil and Gas. Thank you very much.